Happy Monday. I hope you had a great weekend. Today is November 7, 2022, and this is your Monday Election Week Market Update. Hope this video is better for you than those nonstop commercials about how bad the opponents are. If it's not, please don't tell me. There's a lot to get to from last week and again this week, so we'll get right into it. The week started off with some spooky news and some reaction. On Monday, stocks gapped lower on the open as the market digested the previous Friday's big gains and had to swallow the hot inflation data out of Europe and geopolitical news with Russia backing away from their agreement to keep grain flowing out of Crimea. This sent wheat prices soaring again, and with it, more inflation worries. The market was getting positioned for a big week. We'll hear about that in a moment, but Wednesday Fed meeting and Friday payroll numbers, big data points. Add into that the White House announcing plans to try to get energy companies to lower oil and gas prices instead of returning to the money to shareholders with buybacks and dividends, and you can guess the market did not like that. But things were relatively stable. The S&P 500 closed down about 0.75%, the Dow down about 1/3%, the NASDAQ down about 1%. If you wondered if stocks were where the volatility was, think again. Nat Gas on a roller coaster this whole year, up 11.25% on the day. Colder weather coming, while on the energy front, diesel inventory down to 25 days of reserve. Note, trucks that deliver our products, they still run on diesel. We've not been here since 2008. Excuse me. Bonds, by the way, remember when we were watching for the inverted yield curve? It's been 100+ days of inverted yield curve. That's the shorter bonds, the 2-year Treasury, yielding more than the 10-year. 100+ days, and that has been a big precursor to the recession. Just saying, we'll see what happens. Lloyd Blankfein from Goldman did remind everyone that things could go right, not just wrong. He noted possible Fed pause, Ukraine-Russia truce, more on that in a moment, and an end to China's zero COVID policy. None of that seems to be in the cards right now, but that's his list. As we mentioned on Friday, this was the end of a record month. Going into Monday, the last day of the month, October 22nd, 2022, was the 10th best month on record since 1915 and the best since 1976. Did Jay Powell notice? Again, more on that in a moment. Tuesday brought the news story that was in line with Blankfein's item 3, zero COVID. News was that China was forming a reopening committee. Chinese officials had no idea of this, but the rumor had the market moving much higher on the open. Selling came right in after that, and as U.S. eco data disappointed, good news is bad news. High jolts, high ISM, and the Fed whisperer, the Wall Street Journal reporter we spoke about, tweeting that the eco data was not what the Fed wanted. Fed paralysis took over into the meeting starting on Tuesday, and the S&P ended down about 0.40% on the day. Dow was down 0.25%, the NASDAQ down just under 1%. Just two quick other notes from Tuesday. One, this market is acting a bit like a Peanuts cartoon. Now, what do I mean by that? Now, Charlie Brown, the Fed, and Jay Powell, Lucy. Excuse me, remember that Lucy held the football? Charlie Brown took a running start, and at the last minute, over and over again, Lucy yanks the football away, and Charlie's flat on his back. Sounds like the market was getting ready to do their Charlie Brown in hopes of Lucy leaving the ball in place. Stocks on Wednesday opened lower, sold off as the ADP data continued to show a strong labor market, not what the Fed's hoping for. Going into the 2 p.m. Eastern for the Fed announcement, the market was quiet. Initial market reaction was dovish, and the market took that to run with. And on the way up. But as Jay Powell, held the press conference, he pulled that ball away. Markets reacted to his statements and sold off into the close, ending near the lows for the day. Remember that record October? Maybe, just maybe, that gave the Fed some breathing room to keep fighting inflation. One of the most concerning and telling comments that Powell made was when he addressed something we've spoken about here, the oversteering and raising rates too much and not waiting for the effects to play out. His comment was basically, it is better to oversteer and then use our other tools to support the economy. This is not what we want to hear, but was it a surprise? Not really. Excuse me. The market moved back only. The market move only moves us back to where we were about a week ago. Dow down 1.5%, S&P down 2.5%, and the NASDAQ down 3.36%. Thursday markets opened lower, the rising dollar, global rates still going higher, jobs reports due Friday. Bank of England did raise rates by 75 basis points as expected, but they hinted that the terminal rate there may not be as high as expected. Hong Kong and China all of a sudden got a bid under them, up 5.3% and 3.3% respectively, as the zero COVID pivot rumor was back, denied by the government, but that is twice in a week. Fun fact for Thursday, Apple stock in the news again this weekend was worth more than Alphabet, Amazon, and Meta combined as of Thursday. Maybe not after today. Quick note, over the weekend, Apple did validate news from the previous week about their production being hampered by zero COVID policies in China. Overall, the Dow was down 0.5%, S&P Dow down a bit over 1%, and the NASDAQ down 1.75%. Friday stocks were all over the place, spending time far in the red and far in the green, rallying into the close, still lower in the week. Payroll and Fed rate hikes, so much to process. For the day, the Dow was up 1.25%, S&P up 1.33%, and the NASDAQ up 1.25%. Pretty correlated? No. Algos? Not sure. Excuse me. For the week, still in the red. The Dow was down about just under 1.5%, S&P down 3.33%, the NASDAQ down a whopping 5.6% for the week. Recall the record October? Labor numbers, non-farm payrolls on Friday was like a buffet, something for everybody. There were things that some liked and some hated, so that's why that's what had the market all over the place. After the Fed announcement on Wednesday and the press conference, there's always a lot to unpack from this, but remember the Fed will get 5 more inflation reports before the December Fed meeting, November and December CPI and PPI and PCE reports. They'll also see non-farm payrolls again. That's a lot, and a lot of other labor data. Finally, let's remember why the split Congress is good for the markets. Historically, I've probably told you about my favorite bumper sticker. The opposite of pro is con, and the opposite of progress is Congress. So that being said, all eyes will be on the midterm elections and the possible swing states. I've told you that I don't think the outcome will surprise, nor do I think it will rattle markets. With a split Congress, the markets usually perform better. This forces both sides to come to the middle, eliminating the fringe on both sides. We'll see if that happens again. A few fun facts from Sam Stovall at CFRA. The Fed was in rate hike mode in the midterm years of 46, 58, 94, and 2018. Stocks were up an average of 12.8% in the 12 months that followed those years. And 84% of the time, stocks were up in Q4 of election years. For eco data for the second week of the month, remember, is usually mostly quiet. We will see a barrage of earnings. Fed is still the key. Fed heads are back on the road. Waller, Collins, Barkin, Williams, Logan, Mester, and George. I think they're giving Powell the week off, but as I've told you, the Fed lets these comments get out there to take the market temperature. We'll also get another CPI on Thursday. That's big, and wrap up the week with the University of Michigan survey of sentiment, not a hard one to gauge, and more importantly, the 5 to 10 year inflation expectations. We're watching anything with inflation these days. As you can see, there's still a lot going on, and we're getting deep into Q4. Final days of hurricane season. Does that bode well for the Jamie Dimon prediction of an economic hurricane? Let's hope so. We have a lot to discuss. Please keep in touch and keep an eye out for the Friday planning video with more Q4 items to get done. Have a great week.